Thank you for joining me. I'm Alex, and I want to talk about eBay today. And as you can see, stocks went on a bit of a sale today, and I hope the sale doesn't continue. But if it does, might be having some opportunities there. So, what eBay does is basically eBay, and they used to do auctions. They more do like all of e-commerce now, with stores being able to sell new products on there and everything, and it's a very convoluted thing, and they don't really like auctions anymore, but that's what they're known for, so they still do them. So that is the thing. Current price of $37, which gives them a market cap of $29.7 billion. Dividend yield is 1.7%, and I wouldn't have thought that a company this young would have a dividend, but actually 1.7% is quite nice, especially considering a payout ratio of 26%, so not too bad there. Revenue $10.8 billion, which is slightly up, less of a percent there. Earnings $1.8 billion, down from 2.5, which isn't great, and that gives them PE of 18, with a forward PE of just over 11, which is obviously amazing. It's hard to find NASDAQ companies or new technology companies that have a PE this low. Obviously, eBay used to be a growth stock way back when. Now it's kind of not, so I guess it's kind of justified, but still a PE of 11 is just amazing, even if it's forward. Total assets $18.2 billion, which is down significantly. Liabilities $15.3 billion, which is down slightly, which gives them total stockholders' equity of $2.9 billion. And again, that is down pretty much $3 billion there. Overall, I would say that you have a pretty decent company here, which surprisingly pays a dividend. I don't like the balance sheet, but I do like the PE. So overall, I would say that from the financials, it looks reasonably solid. Again, the balance sheet is kind of not worrying per se. It's just not ideal. Forward PE, I really like. Dividend yield is meh, but the payout ratio is really nice. And the revenue growing slightly is not a great thing. But again, I think that the PE more than makes up for it, even the current PE. With no growth, being at a PE of under 20 is pretty decent, especially with a dividend and a low payout ratio and everything else going on. So overall, I would say that for a dividend investor, this might be a good buy. Definitely do your research, see what the prospects are. As far as risk factors go, they don't really do auctions anymore, but even for auctions, there are several competitors that didn't used to be there. So obviously, you have LetGo, which is an app. You have Facebook Marketplace, which kind of takes a lot of their market share away there. But again, eBay doesn't really like to do auctions, so I don't think they really see a problem with that. But on the other hand, you have things like Amazon that they're now competing with, and Walmart.com, and so many others that I think that eBay will always be kind of a niche market where you can get just about everything, whereas Amazon and especially Walmart are more broad. What most people might need at some point will be available on Amazon and Walmart, but what a tiny fraction of people might be searching for in kind of a niche sector that is kind of eBay's thing. So I guess that there will always be room for an eBay, especially when you don't really... eBay doesn't need to have inventory. They don't need to do the shipping themselves. They just provide a platform. And I guess in that sense, they kind of compete with Shopify. But Shopify is different in that everything has a store, and you cannot find everything just on a Shopify aggregated page. So I think that there will always be room for an eBay, and so I think it's reasonably safe. For a growth investor, obviously this is not a great stock. For a value investor, I don't really like the balance sheet, but it's all right. And I think that they pretty much know what they're doing. So I would expect that to be okay for the near term. I would kind of keep an eye on the balance sheet, but overall, I'm not too worried about it right now. And for a dividend investor, dividend is kind of low, but the payout ratio is really low. And so kind of as a diversification stock, I think it makes sense. I would not make it a major position in any portfolio. But again, you can get a lot higher dividend yield, even with a reasonable payout ratio right now. So as a diversification, as like a small position, it makes sense. As a major or the major position, I don't think it makes sense, and I wouldn't really just put a majority of my money into eBay at this point. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.